final stretch of last week's session saw the pound-South African rand exchange rate break downwards to its lowest level this year. But what does the future have in store for the pair? Sam Allen joins me down the line for today's forecasts. Sam, Mark Carney's inflation report and South Africa's below expectation GDP data may have split sentiment on the pair this week. In the short term though, which direction will prevail to your mind?
Yeah, you're right. On a technical picture, we broke down to a new low. So obviously, previously we've been making a series of higher highs and higher lows, and it is technically, it does concern us that it made a lower low at this point. But to our mind, really, the bull trend we think will continue. The pound to the rand will continue up. What we're seeing at the moment is a prevalence of, most people aren't really too bothered about, the yield on the currency or things like that, or global currency flows. We're more concerned really with the risk of holding the South African rand. And there's, a lot of different factors which are playing into this really, but, people don't really want to be holding.
Recent rate cuts in China and strong US GDP have served the South African unit well. Now, 1895 is your midterm outlook, but do you believe investors will be able to focus on global factors as opposed to being blinded by domestic trials in South Africa?
So, good question. I think global factors are having a big impact on the domestic trials in South Africa. So I would say, that they're inherently tied, and the South African economy could suffer as a result of global factors as well, despite, US GDP being good, which, it is pretty good, but the Chinese rate cuts are probably going to have less of an impact in the short term. That's more of a long-term thing. So, our 6-month forecast would stand. That's kind of based on forming a new trend, a new range above the current range at the moment. It's just a range-bound market, but we think it'll break above 18 and form a new range above there.
And lastly, 1914 is where you expect sterling rand to be trading at in the long term. But what will be the main drivers?
Well, we'd say, the main driving factor, potential civil unrest in South Africa, lower commodity prices, as the Chinese consume less, and inherently relatively risky currency to be holding. Really, we could see a resurgence of risk aversion, which could be happening over the next over the next 6 months, on our long-term forecast. So that's what we're kind of keeping an eye on, really. Commodity prices, various things like that, and obviously keep an eye on US growth as well, and Chinese growth, because that could drive the South African rand stronger, but we're not expecting that to happen anytime soon, really.
Sam, great to speak with you. Thank you for your time. Well, viewers, that's all from me, but for a recap of the main market movers this week, click back for the weekly wrap-up with Ben Jones. Goodbye for now.